One asset is shattering records, soaring to heights few thought possible. The other, after a meteoric rise, is in a painful freefall. The market is buzzing with one question: is ancient gold finally dethroning digital gold in 2026? While the headlines are telling a simple story, the data reveals a much more complex battle for dominance. Welcome to the generational wealth community, your pathway from knowledge to legacy. We don't chase hype, we decode the market. We're about to break down the numbers that show who the clear short-term winner is, and, more importantly, which asset might truly hold the crown for long-term gains. The answer isn't what you think. Let's get straight to the data, because the numbers don't lie. As of early March 2026, gold is on an absolute tear. Escalating geopolitical tensions have fueled a massive flight to safety, pushing the price to a peak of over $5,500 an ounce. This isn't just a small jump. It's a historic run that follows a year where its value soared. Some analysts are now forecasting it could reach $6,000 an ounce within the next 12 months. Now, let's look at Bitcoin. The picture is the polar opposite. After a powerful 2025 that saw it peak around $126,000, Bitcoin has been struggling. It's currently trading for less than $70,000, fighting to find its footing after a brutal correction. A key metric here is the gold to Bitcoin ratio, which tells you how many ounces of gold it takes to buy one Bitcoin. With Bitcoin's price falling, a single coin now buys you significantly fewer ounces of gold than it did at its peak. In the opening months of 2026, the market is clearly showing us that gold is having a much better year. So, what's behind this massive divergence? There are a few key factors driving gold's recent dominance. First and foremost, gold is reclaiming its throne as the ultimate safe haven asset. With significant geopolitical tensions escalating globally, investors are flocking to safety, and gold has been the reliable store of value for centuries. The second major driver is relentless demand from central banks. Even with record-high prices, central banks scooped up a massive 863 tons of gold in 2025. This isn't a fleeting trend. It's a structural shift as countries continue to diversify their reserves. This institutional buying creates a solid floor for the gold price. Finally, gold is showing a low correlation with other assets, meaning it holds its value even when stock markets get volatile, making it a powerful tool for portfolio diversification. On the other side of the ring, Bitcoin is facing a perfect storm of headwinds. Many analysts agree the market is in a deep corrective phase. Instead of acting like digital gold, Bitcoin has been behaving more like a high-risk tech stock, highly sensitive to speculation and shifts in market sentiment. We've also seen significant outflows from Bitcoin ETFs, which were a major driver of its previous rally. The fourth quarter of 2025 saw billions withdrawn as large investors reduced their risk exposure, with one report showing $4.5 billion in outflows. While some long-term holders or whales are accumulating during this dip, the broader market sentiment has clearly turned cautious. With the Fear and Greed Index recently hitting its lowest point since the 2022 bear market, the volatility that once promised explosive gains is now a source of anxiety, pushing many to the sidelines. This is where the story gets interesting. While gold is the clear favorite in the short term, the long-term picture is far from settled. Many analysts, including those at Bernstein, view Bitcoin's current price as a potential buying opportunity, maintaining a price target of $150,000 for the end of 2026. Historically, Bitcoin has operated in 4-year cycles, and some experts, like Vanek CEO, believe a deep correction is a necessary part of this pattern before the next major bull run. Think of Bitcoin as teenager gold. It's volatile and unpredictable, but it has immense growth potential. While gold might deliver steady returns, Bitcoin offers the potential for explosive gains. Forecasts for Bitcoin by the end of 2026 are wildly divergent, ranging from a bearish dip to around $41,000 to a bullish surge toward $150,000 or even higher. This uncertainty is the opportunity for long-term investors who believe in its future as a decentralized global asset. So, is gold dethroning crypto in 2026? The answer is a classic yes and no. In the short term, absolutely. Gold is the clear winner for investors seeking safety and stability in a world filled with uncertainty. Its performance is backed by powerful fundamental drivers like massive central bank buying, and its proven role as a safe haven. But the long-term war for the crown is far from over. Bitcoin's current struggle may simply be a painful yet necessary part of its maturation. For investors with a long-time horizon and the stomach for volatility, this correction could be the entry point they've been waiting for. The winning strategy might not be choosing one over the other, but understanding their different roles in a portfolio. Gold is the shield, protecting your wealth in times of crisis. Bitcoin is the sword, offering the potential for spectacular growth. The dance partner in the lead will continue to change, but for now, it's the ancient metal that's taking center stage. Subscribe for daily recaps, drop a comment on your biggest takeaway, and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.